Ever wonder how the world's millionaires and billionaires manage their investments? Recent revelations from the Wall Street Journal shed light on a remarkable trend. Morgan Stanley's wealth management clients currently hold approximately $68 billion in securities-based loans, more than double the figure from 5 years ago. Bank of America also reports their clients having $62.4 billion in securities-based loans. This prompts curiosity. Why would the wealthy, who already possess significant wealth, resort to borrowing money? The buy, borrow, die wealth strategy. Surprisingly, this strategy is not confined to the privileged few. It can be applied by individuals across all income levels. Regrettably, it's an approach seldom taught in traditional educational systems. At its core, the buy, borrow, die strategy represents a sophisticated wealth management approach that enables individuals to not only amass wealth, but also safeguard and perpetuate it over generations. This strategy stands as a testament to the financial prowess of the elite, as they utilize it to ensure that their wealth remains within their families and continues to grow. The fundamental concept behind buy, borrow, die is to harness the power of leverage and financial instruments in a way that maximizes returns while minimizing tax liabilities. Still don't understand? Don't worry, we will be tackling each of the steps so you can also invest like a millionaire. Step 1. Buy, accumulating wealth, the foundation of financial success. The buy, borrow, die wealth strategy begins with step 1, known as the accumulation phase. This phase is where the journey towards financial success truly commences. During this period, individuals focus on building the solid foundation necessary to accumulate wealth. It involves a series of deliberate steps that, when executed strategically, can set the stage for lifelong financial security. Let's dive deeper into this critical phase and explore the nuances of various asset types. The key players: real estate, stocks, crypto. In the world of asset accumulation, there are 3 primary asset classes that stand out as key players within the buy, borrow, die strategy. Real estate. Real estate is often hailed as one of the most powerful assets in this strategy. It's favored for its stability, ability to preserve value over time, and the array of tax benefits it offers. What makes it truly shine, though, is its potential for leverage through borrowing. Wealthy individuals acquire real estate properties with the intention of holding onto them for the long term, rarely opting to sell. Stocks. Stocks, representing ownership in companies, are another vital asset class. Affluent investors acquire dividend-yielding or growth stocks and allow them to appreciate in value over time. Instead of liquidating these valuable assets, they use them as collateral to secure loans, a critical component of the buy, borrow, die strategy. Crypto assets. The world of cryptocurrency, particularly stable blue-chip cryptocurrencies like Bitcoin and Ethereum, has emerged as a formidable player in wealth accumulation. Savvy investors accumulate these digital assets, harnessing their substantial growth potential. Over time, they amass cryptocurrency portfolios worth millions, which can also be leveraged through borrowing. Before we continue unraveling the wealth-building secrets, take a quick moment to show your support. If you're finding this information valuable, don't forget to give us a thumbs up and hit that subscribe button. Your support fuels our mission to empower you with financial wisdom. Now, let's dive right back into the action. Step 2. Borrow, exploiting financial leverage. Step 2 is where the buy, borrow, die strategy truly comes to life, revealing its financial alchemy. The goal here is to exploit interest rate arbitrage to your advantage. This concept revolves around borrowing funds at a lower interest rate than the expected growth rate of your assets, allowing you to generate profit from the interest rate differential. Let's illustrate this concept with a practical example. Imagine you have an investment portfolio valued at $100,000, generating a respectable 10% annual return. Now, suppose you can secure a loan of an additional $100,000 at an exceptionally low 2% interest rate. By doing so, you effectively increase your investment capital to $200,000 since the cost of borrowing is a mere 2%, equivalent to $2,000 per year. You earn an extra $10,000 annually with the borrowed funds. After accounting for the interest expense, you still pocket an additional $8,000 in profit, essentially free money. Scaling this strategy to manage millions of dollars showcases its immense potential for wealth accumulation. How to employ this strategy with stocks, real estate, and crypto. Stocks. The strategy can be implemented with your stock portfolio through methods like Securities-Based Line of Credit or SBLOC or margin loans. These financial instruments enable you to leverage your investments for potentially greater returns. Real estate. Homeowners can utilize a home equity line of credit or HELOC if they possess equity in their property. A HELOC provides access to low-interest rate loans, which can be used for various investment opportunities. Crypto assets. Many cryptocurrency exchanges and platforms offer crypto borrow products, allowing you to use your existing crypto holdings, such as Bitcoin or Ethereum, as collateral for loans. This approach empowers you to access additional funds for further investment. Understanding the risks. While the buy, borrow, die strategy presents significant advantages, it's essential to be aware of potential risks. One primary concern is the risk of a margin call, which can occur if your investments significantly decline in value. In such cases, you might be required to sell off assets to cover the loan, potentially resulting in substantial losses. A notable recent example of this risk is the Archegos incident, where a billionaire family faced significant financial turmoil due to excessive leveraging. Step 3. Die, Legacy and Continuity. In the grand finale of the buy, borrow, die strategy, we enter the realm of legacy and continuity, a phase that holds the key to preserving wealth for future generations. This step isn't merely about accumulating riches, it's about ensuring that your family's financial security endures and thrives. So, how does this work? Wealthy individuals, after years of strategic accumulation and leveraging, embark on the mission of securing their amassed assets for the benefit of their loved ones. This step begins with the transfer of their wealth into trust structures, which serve as the guardians of their financial legacy. Now, what's truly fascinating is the concept of a stepped-up cost basis. This financial maneuver allows heirs to inherit these assets with a revised valuation, one that reflects the current market value at the time of inheritance. What does this mean? It means that when your heirs eventually decide to sell these assets, they can do so without incurring substantial tax liabilities. This creates a powerful financial safety net, ensuring that your hard-earned wealth remains intact. But here's where it gets even more intriguing. Instead of opting for asset sales, many affluent families choose to perpetuate the cycle of buy, borrow, die. They continue to acquire, borrow against, and pass on their wealth to subsequent generations, creating an enduring legacy of financial prosperity. In conclusion, buy, borrow, die is a powerful wealth-building strategy that can be harnessed by individuals from all walks of life. Its potential for financial growth is immense, yet it remains a concept rarely explored within traditional educational systems. By understanding and effectively implementing this strategy, individuals can aspire to secure their financial future and create a legacy for generations to come. As we move forward in this exploration, we will further dissect each step, providing you with practical insights and guidance to empower you to invest like a millionaire. You've just uncovered the buy, borrow, die strategy, a millionaire's roadmap to financial success. Now, it's your turn to dive in. Here's the fun part. In the comments, tell us one thing you're excited to try. Maybe it's investing in stocks, exploring real estate, or even dipping your toes into crypto. What's your financial adventure plan? Share it with us. And if you found this journey exciting, make sure to hit the like button and subscribe for more helpful tips and financial insights. Your financial future is bright. Let's make the most of it together.